Welcome everyone to Vested Interest. This is Shane back again for the Stock Pick of the Day video. It is April 23rd, Tuesday. We're going to take a look at Graphic Packaging International. This is a suggestion from Jacob Donkey Butt 1089. Could you do GPK, please? I really want to hear your thoughts. We're going to take a look. So this is for you, Jacob. And this is out of the consumer discretionary sector. And if you are new to the channel or have just not done so already, if you could take a moment and help me out, hit that thumbs up button down below if you find value in the content. Make sure you're subscribed to the channel. It really does help out. Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Make sure that notification bell is clicked and drop a comment down below. Let me know what you think of the video. Let me know what you think of this packaging company, GPK. Now, this is the Vested Interest Stock Screener. This is how I look at a company on a high level to see if I'm interested in investing. It's also how I set up these videos. So we're going to run through this criteria here with this company and any other company that we do on the Stock Pick of the Day series. This is how I set them up. Now, if you want to know more about this company, check them out at www.graphicpkg.com. That's www.graphicpkg.com. That is their homepage where I pulled this information from. For some of the world's most recognized brands, creating unique and innovative packaging solutions is a way to simplify and enhance the consumer experience. As the world's leading sustainable consumer packaging company, we do just that. With a product portfolio that emphasizes renewable, recycled, and recyclable materials, we are as committed to our customers and employees as we are protecting the environment and giving back to the communities where we live and work. And that's really their bread and butter. They are the packaging company. So when you buy a box of cereal, for example, you know, the cereal is in its own packaging and the box that it comes in, as well as any other packaging company out there. When you get a box of sodas, for example, the box that they would come in would be the packaging of the company. So they are not only the packaging company, but they are also putting together the the print on the outside of, or how that packaging or how that brand is displayed on the packaging as well. And you can kind of see here, I know part of this is covered on the map, but the map here shows you where they are. So the green would be global headquarters, regional offices are the, what is that, maroon, packaging here, design, innovation places, mills, machinery. Again, you could go to the website and see all the different places, but they are an international, the one thing I wanted to focus on, they are an international company, right? So they're not just doing packaging for United States companies, they are all around the world, which gives them access to many, many other markets outside the United States. Now, the reason we're taking a look at them, down 1.13% on the day, we are talking about Graphic Packaging Holding Company, ticker GPK. Close out the day at $27.08. 52-week range as low as $20.07, as high as $29.50. So they are closer to their 52-week high than their 52-week low. Market cap of $8.321 billion. So this is a small cap company. A beta of 0.84, so less volatile than the overall market. Price to earnings ratio, you'd have to compare them to other companies in the sector, but overall, this is a low PE. Price to earnings of $11.57 per share. Earnings per share sitting at $2.34. That's a nice earnings for a company like this. Again, you'd have to compare them to some other companies in their sector to see how they shake out. Earnings date is coming up April 30th, so at the end of the month, it'll be here next week. Forward dividend is 40 cents. They are a quarterly payer, so that's 40 cents divided by 4. We'll see that here in a little bit. Current dividend yield 1.46%. Ex-dividend date was March 14th. Looks like they just paid out on April 5th. So kudos to those of you out there who own this. Jacob, if you do, you've probably already received your dividends on this one. 1-year target estimate, at least according to Yahoo Finance, $30.88. Again, I pulled this from Yahoo Finance, and I have another source that we're going to look at here in a minute. I always recommend more than one source so you can make sure the information you're getting is accurate and up to date. Now, we're going to take a look at dividend yield theory and see if this one is potentially undervalued. To do that, if you were to go to Yahoo Finance, you go over here on the left-hand side of the chart. You'll see a lot of tabs you can click on. Statistics is the one we're going to click on. You've got analysis, financials. But for this particular one, you click on the statistics tab. You go down to dividends and splits. You look at their 5-year dividend yield average, 1.73%, and compare it to its current 1.46, or over here where it says forward, 1.46, same number. And since it is lower than their 5-year average, that speaks to overvaluation on this one. So if this number was higher, that would speak to undervaluation. So currently, because their current dividend yield is lower than their 5-year dividend average, that speaks to a little bit of overvaluation on this one. So we want to look for more of a pullback towards this 52-week low on this one to try to buy them under their 5-year dividend yield average, at least according to dividend yield theory. If you do a discounted cash flow analysis and it says something different, then maybe there's something there. But right now, at least according to dividend yield theory, this one is potentially overvalued a little bit. Payout ratio is very low, though, 17.09%. We'll see how fast they're growing here in a little bit. Very low payout ratio. That gives them a lot of room to increase this, even though it's only 1.46, which, again, their 5-year dividend yield average of 1.73. If you can get them closer to 20, you probably get that in the 1.8, maybe even 1.9 range if it was to drop all the way back down to their 52-week low. So that wouldn't be a bad starting dividend yield, depending on how fast they're growing. We'll see that here in a little bit. Now we're going to take a look at their free cash flow going back to 2020. Looks like they had $179 million in free cash flow. 2021 a negative, so they may have had a write-off or something there. You'd want to do a little bit more deep dive into the financials and see what's going on there. 2022 back to growth, $541 million. 2023 down a bit to $340 million. Though they did start repurchasing some shares here. Big repurchase in 2020. Dropped off a little bit in 22, nothing in 2021. So that leads me to believe they had some sort of write-off. 2022 negative 28, so they bought some shares there, and 2023 increased that a little bit. I'm wondering if they're going to continue that trend going forward. Overall, from 2020 to date, I would say growing free cash flow with a little bit of up and down here from 2021, 2022. Big jump up there in 2022 and a bit of a drop here in 2023. Overall, though, from 2020 on, you're seeing growing free cash flow, which is good. Now, stockanalysis.com is another site that I like. And again, just make sure you're picking more than one site, not just blindly following one, just to make sure the information you're getting is accurate and up to date. And any sites that you want, that's completely up to you. These are just 2 that I like. Now, they have 9 stock analysts that have taken a look at this. They call it consensus buy, though it is right on the edge of a hold there. Now, they have a low estimate of $21 again, so it might be worth watching to see if it pulls back towards their 52-week low, and that would be a 22.51% decrease from where it currently sits. They have an average estimate of $29.11. That would be a 7.42% increase, and they have a high estimate of $37, which would be a 36.53% increase in their. What we saw with Yahoo Finance was a little bit between their average and their high here, just to give you an idea of where they fell from Yahoo Finance compared to stockanalysis.com. Now, we're going to get into the statistics here and look at return on equity and return on invested capital. I like 10% or better for both of these metrics. Now, the return on equity on this one sitting at 28.7%. Very good number there. Return on invested capital, 11.16. That's over the 10% I'm looking for. Now, I did look. They did not have anything estimated for EPS growth, earnings per share growth. I typically like 5% or better. So, Jacob, if you happen to know, go ahead and drop down in the comments section if you've seen anything on their earnings per share forecasts. And they didn't have anything on their revenue growth again. So, Jacob, again, if you happen to know, go ahead and drop it down below and share with the rest of us on this one. I just could not find that information when I looked on stockanalysis.com. Now, again, quarterly payer, we're going to look at the dividends here. Quarterly payer, very low payout ratio, 17.09%. Very high dividend growth, 14.29%. So even though they are a little low on the starting yield side, but again, if you were to wait for them to pull back closer to that 52-week low, $20 per share, you could get them, probably around a 1.8, maybe even a 1.9 dividend yield, and that would be much better than where it currently sits. But very fast dividend growth. 14.29% is very good dividend growth. Now, they only have 2 years of dividend growth. So if they continue that, that's very good. And they do have a low payout ratio, so there's no reason to think that they won't continue that. So low starting yield, but very fast dividend growth, especially for some of you younger folks out there. This might be a good compounder. Buyback yield, 0.35%. Shareholder yield, 1.81%. All good numbers on this one overall. The only thing I don't really like right now, and we need packaging, right? Every product out there needs packaging, so the company's not going anywhere. The only thing I would say right now is I would want a bit more of a pullback towards its 52-week low, maybe under $22. I would start being interested in this with a higher yield above their 5-year dividend yield average. That way I could see some potential undervaluation on this one. I like a bit of a margin of safety. Now we're going to go back to 2021. They were paying out 0.07 cents and some fractions of a penny. They raised it up December 2022 to 10 cents. and they haven't raised it up. So I would expect, they didn't raise it up at all in 2023. I would expect a relatively quick raise here, unless they're going to raise it up again in December. Maybe it's December timeframe in 2024 when they do their raise again, but I'd keep my eye on that. Again, very nice dividend growth, a bit of a low starting dividend yield, but not terribly so. It's not like it's in the under single digits, like a 0.35% or 0.5% or something like that, like you're getting from Microsoft or Apple. It is almost 2%. And again, if you were to wait for it to hit its 52-week low, you'd probably get it closer to 2%. And with this dividend growth, if they sustain it, as they have the last couple years, that's very nice dividend growth. Well, that is it for this one. Let me know what you think of the company down below. Jacob, hopefully that is what you were looking for. Let me know what you think. Do you own, I'm assuming you own shares of the company. How long have you owned it? Did you get your dividends paid out last month? And are you buying more right now, or are you waiting for more of a pullback? Would love to hear from you on this one. Again, and if you happen to know the EPS and revenue forecasts, let me know down in the comment section. I'd be interested to know that as well. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investors for educational and entertainment purposes. Investing involves risk, accumulates money, and should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice of a certified financial advisor.